Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at one of the largest and most important sectors on the Trinidad and Tobago Stock Exchange. Of course, we're speaking about the banking sector, which accounts for just over half of the value of the entire stock market on the Trinidad and Tobago Stock Exchange, and is also a fairly important part of the overall economic and financial system. Now, banking stocks would have come under pressure from a price perspective over the past few years, even though their earnings would have been recovering from a post-COVID or from the COVID type period of the pandemic where economic activity was significantly affected. So let's take a look at what investors have been focusing on, which is, are banking stocks actually offering value right now, or is the sell-off warranted or validated by lower earnings? So let's get right into it. And this first chart would show us here that the banking sector's overall value or market capitalization in that blue shaded area to the back of this chart would have been under some pressure over the past few years. In fact, from the end of fiscal 2021 to current levels, the value of the banking stocks would have fallen from about 80.1 billion to just about 65.4 billion. So roughly an 18% decline over that period, which would span basically just about 1.5 years. Now, thankfully, on a year-to-date basis, that value has eked out just a very, very small gain, up around 1.5% from 64.4 billion to 65.4 billion markers. So certainly some good news for banking sector investors with that stabilization and valuations overall of the sector. Now, that is somewhat surprising given that from COVID, which was during fiscal 2020, there has been a consistent aggregate increase in earnings for the banking sector portfolio. And now our banking sector portfolio is defined as owning one share of each of the publicly listed banks overall, and taking a look at how that singular portfolio would have performed. So yes, when we take a look at it, the earnings per share on a trailing basis would have reached and in fact surpassed pre-COVID levels on a trailing basis for that banking sector portfolio. So certainly the trend is positive and moving in a right direction despite that falling valuation for the sector overall. When we take a look at dividends for the banking stock or banking sector as well, that banking sector portfolio on a trailing 12-month basis, let's take a look, on a trailing for 6 months of 2022 versus 2023, we can see that there has been a roughly 8% increase in the dividends declared and paid for those or that banking sector portfolio, increasing from $3.22 to $3.48. So certainly, again, an improvement in that cash flow from this banking sector portfolio that investors would have received. And on a longer-term trend basis, we can see that from COVID again in fiscal 2020, there has been a very strong recovery in terms of dividends being paid by banking sector constituents, certainly moving from that low of $6.82 in our banking sector portfolio, or stylized banking sector portfolio, at the end of fiscal 2022 to just around $9.67. So again, all indicators pointing in the right direction, which again is somewhat surprising to investors in the banking sector stocks, given that fairly pronounced decline in valuations overall. So speaking of valuations, when we take a look at the price to earnings multiples of banking sector stocks, we can see the price to earnings multiple again is what an investor pays in terms of price per dollar of earnings generated. We can see that most of the banking sector stocks are trading at or very near to their price earnings multiple lows over a 5-year trailing period. First Caribbean International, for example, currently trades at a price earnings multiple of 7.5 times, which is very, very close to its all-time low of 6.7 times over the past 5 years, compared to its high of 20.6 times. We're, of course, looking at only positive price earnings ratios. And overall, the sector average way to the right-hand side is trading at its all-time, its 5-year trailing low of 12.8 times versus a high of 20.9 times, which would have come around 2021 or thereabouts. But again, as you scan across the graph, you would notice that with the exception of Scotiabank, most of, if not all of, or most of the other banking sector stocks are trading at their or very near to their price PE multiple 5-year low. So certainly it would appear from that metric that value is on offer for investors in banking sector stocks. A similar case would be made looking at the market to book ratio for banking sector stocks. Again, most of these stocks are trading at or near their 5-year lows, with the exception of Scotiabank Trinidad and Tobago, which is trading at the current level of 3 times versus its all-time, its 5-year trailing high of 3.2 times. The banking sector average again around 1.7 times right now versus its 5-year high of 2.1 times. So again, the key takeaway from this is that it would appear, using these valuation multiples, that there is some value on offer for investors who are going to be focused on the banking sector as part of their portfolio. Now, in terms of an overview, currently Bourse has an overweight rating on one of the 5 publicly listed banks, and that would be First Caribbean International, FCIB. And there's a review date coming up in September. That stock, for example, would trade at a price-earnings ratio of 7.4 times with its market to book of 1.3 times and offers a fairly good dividend yield of 4.2%, also paid in US dollars. So another attractive value proposition there for investors who could take their TT dollars and buy a stock that pays dividends in USD. But again, most of the other banking sector stocks are rated market weight or particularly neutral. But given those price corrections and with those upcoming dates, one never knows, with continued strong earnings performances, as we've been seeing very early signs of during the course of 2023 thus far, those ratings could be subject for a change. So again, one of the major sectors to keep an eye on in the Trinidad or on the Trinidad and Tobago Stock Exchange, certainly the banking sector, and maybe investors having seen it lose some of its luster over the past couple months. It's probably time to take a second look at it. So that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse, email us at invest@boursefinancial.com, or of course check out all of our research on our website, which is absolutely free at bourseinvestment.com. And you can catch us in today's business section of the Trinidad and Tobago Guardian newspaper, of course. Stay safe, happy investing, and we'll see you next time on the Bourse Report.